Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. As usual, we have prepared a fundamental report today, and in report we are trying to take a look at some actually at the gold market, but with a bit different degree, based on things that now is going on in the world. So in particular speaking, you know what's going on with the global cargo shipping. The logistics is totally broken. Some problems about inside the US concerning economical conditions, and actually now it's another shutdown stands on the horizon once again. All these topics actually mentioned in the media, and it's not some surprising or something, but the problem is that media, with the mentioning of these topics, do not provide any numbers. So you know the problems in the budget, you know the deficit, but you don't know what the degree of it and why it is so important right now. You know about the crisis in the Red Sea, in Yemen, but you do not know the numbers and what's really could happen when the effect of this problem starts appearing in the statistics. And all the stuff I have considered in a recent report on the gold market. That's very important because currently is everything has a relation to each other, and it might seem that we're watching on some absolutely different moments, but the consequences of these events will make clear impact on the performance of the market, not only in gold market, but the bonds, stocks, and gold, of course. And we have shown in the report how this could happen actually, and why we think that gold market stands at the eve of the most prosperous times for this market in the nearest time. So that's the topic of our report. Now, speaking about the technical side, here actually on Friday we've got the performance that we have suggested. So if you remember, on Friday morning we said, well, since market stands stubbornly near the lows and can't break it down, it is logical to suggest that probably we should get upward performance. And right at this moment, at the end of the session, the attack on the Yemen from the United States, United Kingdom coalition has happened. So that has boosted the performance on the gold market slightly greater than we thought. So if initially we were speaking about, I will show you on hourly chart, we were speaking about two possible hand shoulders patterns. First, we suggest that this might be the first pattern, right? So this will be shoulder, head, and that's the first level that we intended to watch for. It's 2045 former confidence resistance. Market has accelerated further and reached our second target that we discussed as 2060. And right now we could consider only the second large head and shoulders pattern that you actually could see on the fall time frame chart. So that's how it looks like, right? So that's the first pattern that we will be watching for next week. Currently, downside reaction already starts right from this level. Here we need to keep an eye on two levels. First one is area where market stands right now. We think that we should not ignore it by the two reasons. First of all, this is support by itself, the 2043 fib level, and also you can see this is former area that splits the zones inside of the channel. So if you remember, we discussed how market behaves and moves between the trading zones. And every zone is protecting itself, making like a barrier to prevent market return back inside of this zone. So you can see market retesting, drop, once again retesting. So this area is protecting itself. Here's what was broken. Market is moved right to the previous area of protection, let's call it in this way. So everything is absolutely reasonable and very beautiful from in terms of the technical analysis. So everything works, that's perfect. Second reason why this level is important, recall that this was our confidence resistance area and it has been broken without any response. Very often, I would say that even as a rule, this area becomes the level that market is retesting after it has been broken on some retracement, and it could become the support where market could reestablish a protection. So despite that, the harmony of this pattern suggests that it's more reasonable to consider 2030 area, that is corresponds to the left bottom, right, left arm bottom. But this level is also very important, and it's really could happen that here's acceleration might start. That's why once again we suggest that using the same way of the entry, when you use the gradual entry, currently looks not bad idea. So take some minor part of your position here, 30% maybe. Market drop, take the bulk around 2030. That will be reasonable. At this moment, we do not consider any new shorts. So we could speak about them again if market will break the 2030 down and hand shortage will be erased. In this case, the bearish scenario will return back. But right now, overall performance that we see here doesn't correspond to idea of the bearish scenario. Besides, on a daily chart, this is response on a strong support area. So this is, if you remember, weekly Fib level and also 618 level right there on hourly chart. This was just, I have deleted it, it was right there. So it was also a response to the weekly confidence, and that might be the upward continuation because weekly trend remains bullish. The only thing that we need to keep an eye on, and this is second pattern that I mentioned in the beginning of the video, is a possible bearish grabber. Well, for the bulls, hopefully it will not be formed, but we can't exclude this totally, and this provides some risk factor for the bullish context. That's why we have to keep an eye on it. Probably it will happen not on Monday, not on Tuesday, but somewhere closer to the middle of the week. This problem could become reasonable, and that's the second pattern that we have to keep an eye on. So that's in two words what we intend to do on the gold market next week.